Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Monday, June the 4th, 2012. Well, a change of trend to the upside today, and the candle that we're analysing is the second last candle on the chart here. The final candle that we're looking at here is currently developing, so we'll see how that candle develops tomorrow. But already we're looking as though the market is continuing with this bullishness that we've seen in the market today. Previous day's trading, we had an outside bar in bar chart terms, didn't change the trend was down. Doji type candle prior to that did set the market up for a potential change of trend, and we've seen confirmation of that change of trend today with the candle that's made a higher high and a higher low. A white bodied candle denoting the buyers making some good net bullish progress as opposed to the bearishness that we've seen over the previous couple of weeks, so quite a change of momentum in this market. The buyers have closed with control of this market as well by closing up towards the high, and they've shown some good strong commitment. The buyers have also taken out the 124.55 area, which was fairly important, and we've seen the market halt for the trading day at the close today around the Tenkan Sen, and that held as resistance, but we're already seeing the market trade above that level, so the upside momentum seems to be continuing. To the downside, previously we saw the market testing down to lower levels, down to 122.87, and the strong rejection. There was a hint of it in the previous day's trading prior to that with the doji type candle, and then the strong rejection for the previous day's trading, and we've seen the buyers follow through today, which is what we'd like to see when we have establishment of a new first time frame uptrend. Now, just looking at the Fibonacci extensions and just examining the prior downtrend before we had confirmation of the change of trend today, we can see that the market interacted with the 100% level. So we're looking at the relationship of the downswing, current downswing to the previous downswing, and we had strong rejection from the 100% level, and this highlights how well quite often these Fibonacci ratios in terms of the extensions, how they work so well, and confirmation of that change of trend today. In terms of the current extension, and we're looking at now the relationship of the current uptrend to the prior time that the market was trending up, and we've already ended up trading through the 100% level, and the market today closed right at the 161.8% level, 124.94. Now that is normally an important level, but today we're also already seeing the bullishness in this market. So with the solid upside momentum that the buyers built up today, then there is a strong possibility that we will see the market testing at higher levels, and perhaps up to the 261.8% level, which is at 126.22. Looking at the prior Fibonacci retracement of the previous downtrend, and here we see the downtrend in place, and we're looking at the relationship of that to the prior upswing, and the market is held at the 261.8% level, and once again with this Fibonacci retracement, the 261.8% level has proven to be a very, very important level where we've seen strong price rejection to the upside. But now to the current retracement of the previous downtrend, and we've seen the market close today right at the 61.8% level, so we have a confluence of importance here around this 125 area roughly, but certainly with the upside momentum that we've seen, we're now seeing the market trade higher. The market is testing to the 78.6% level, which is not an important level, but still should be watched as a potential area of resistance. If the market trades through there, then the next level to watch is the 100% level, which is at 126.23. In terms of Ichimoku, at the close of the current candle, that's this second last candle on the chart here, we had a market that was bearish in the long-term time frame by trading below the cloud, bearish in the medium-term time frame by trading below the Kijun Sen, and neutral in the short-term time frame by trading below the Tenkan Sen. The Tenkan Sen, as I've mentioned previously, normally holds as an area of strong resistance for a market when we've had solid downside momentum. At the moment, the way this market's developing, it doesn't look like that's the case. So I think if we do see follow-through from this market today, it will show how strong bulls are at the moment. If they are able to take that out significantly, whereas we would normally expect that to hold as some sort of resistance, and we could see the market trading to much higher levels. Certainly it has potential to trade up to 125.86 and just below, beyond there to the 126.26 level to the swing highs, and then even potentially up to around this previous area of minor support around the 127 level. The Kijun Sen is pointing flat, and that occurred for the previous day's trading. We saw that turn flat. We've seen price action attracted back towards there. The Kijun Sen remains flat, so there is potential for this market trade higher. The market was looking overextended, which was something that I mentioned previously, and it was due for a bounce back, and potentially to bounce back to the Kijun Sen, which represents the market in terms of equilibrium in that medium-term time frame. And certainly the buyers are supporting this uptrend that the market is in at the moment. So moving forward, obviously the area at 125.86 is very important. We do have potentially strong support below at 124.55.